Hi, and welcome to another weekly recap. So, today I'm going to recap the first week of April 2025. So, it also includes the last day of March. So, in this week, I got two trades and I missed both of them. So, one happened during London lull. So, I don't trade during London lull. So, it is as per the rules. So, this is not actually a technically a missed trade as per the rules, but I'm just marking it out because in future, as I collect data, if there are more missed trades that run in profit during London lull, then I can include trading during that period. So, and this mistrade is something that happened on the start of the week, and I was out traveling. So yeah, the session actually ends at 7:30 p.m. IST, which is in line with my daily schedule. So on this day, particularly on this day, so I was out traveling, and it happened on that day. So probably from the next week onwards, I predict that it won't happen because the time zone has shifted plus from UTC to UTC plus one, which aligns with my IST time zone perfectly. So I'm expecting from the next 7 months, um, I can expect me utilizing all the opportunities that exist that comes along the way. So let's start from the March 31st. That's the first day. So here we go. The March 31st, day one. Let's start with the daily chart. So the swing structure is bullish. The swing structure is bullish, and the internal. This is the internal, and the internal is not yet shift bearish. So we are still running an internal bullish structure, and the price is between this demand and this supply. So it's kind of a consolidating market. But in the low time frames, we may have some pullbacks. We may have some internal structure which we can use to trade within that session direction. So coming into the 4-hour chart, here you can see this is the 4-hour swing structure, and uh, yeah, this is the 4-hour swing structure. So after the swings, after the 4-hour pause, what we can expect, the 4-hour pullback. So that is what is happening. So here is the 4-hour equilibrium. So if the price reaches this equilibrium, we can expect the price to push further up. So that's what is the actual expectation. So till the price reaches this equilibrium, I can look to play the 4-hour. I can look for sells following the 4-hour internal structure. So currently, what we see is the 4-hour has took out some buy side liquidity, and which means this low is now becoming weak. Why? Because there is no other lows here. This is the only low, and this low failed to take out the high. This low failed to take out the high, so this low becomes weak. So we can jump into the H1, and we can look for some sweep zones which can be formed during the session, and we can look for sells targeting this weak low. So here we go. This is the H1 chart, and in the H1 we can see that this equal highs has been swept. So which means there is a high probability that this equal lows can be taken out. So this is technically not an equal low because this has swept this low and then it pushed up, which means this is actually a POI. So technically this POI failed to take out this high, which means this POI is not strong. So this POI can be taken out, and also it does not have any inducements right here. So it's just a straight push up. So all the liquidity rise below this low. So I can confidently expect that this low can be flipped and then it can be taken out. So as expected, price pushed down, so took out all the sell side liquidity, and it then pushed up. So after taking this sell side liquidity, it just pushed up, mitigated this POI, and then it pushed down. So this is where I missed the trade. So let me discuss the positives and negatives of this trade. First of all, price of the sell side liquidity. Now the price will be targeting some buy side liquidity. So that buy side liquidity can be in the form of higher time frame buy side liquidity or lower time frame buy side liquidity. So in this case, it was lower time frame buy side liquidity, and that is the lid here. So price took out the buy side liquidity, and then it pushed down to, and which ended up a beautiful LC1. So yeah, actually this POI is also good because it swept liquidity, and it has displacement, and it also got inducements in the form of lower time frame liquidity. And it uh, one thing one drawback of this setup is that this low actually swept strong liquidation and then pushed up. So this could easily flip this demand, and it could have been gone further up, but in this case it didn't go anyway high, missed this trade. And if you consider the overall structure, this would be a high probability trade. Why? Because the swing high got swept, and internally this equal highs got swept, and again the high that swept the equal highs also got swept. So which means a lot of buy side liquidity is being grabbed. So which means the price has a lot of chance to go down to take out the weak swing low right here, which ended up playing out. But I was traveling at that time, so I was not able to capitalize on this trade, and it ended up being a missed trade. So that's the difference. Again, I still tell you, this is the difference between a live back testing session, a live trade. So you can't escape the real life variables when you trade live. So coming into the next day, that is the April 1, the fresh week of in the fresh month. Again, the price is still consolidating, and a lot of sell side liquidity as well as buy side liquidity is being accumulated. So there is no clear direction in the daily. So let's jump into the 4-hour chart. Here you can see the price did not take out the weak internal low, which means there is still some chance that we can look for sales targeting the weak internal low. And yeah, price has reacted off from this demand zone. So that's not a worry, because we are interested. I was interested in longs only when the price did something like this, a strong bullish internal structure to be formed, so that I can get involved. But apart from that, I was not interested from this slight reaction from the demand zones, because anyway the internal structure is bearish and the price is still in the premium zone. So I was expecting the price to still move further up. So what we can say, we have this POI. So this POI actually swept liquidity and it has some displacement. So I can expect this POI to hold and push the price down to take out the weak internal low. So that was the plan for that day. And yeah, here you go. This was the POI. So price actually mitigated the POI. All I wanted is the price to chalk bearish. So once the price chalks bearish, then I can look for sells. And price did chalk bearish, and price mitigated the POI, but this mitigation was during the London lull. So that's what I mentioned you earlier. So this was the POI, and price mitigated with a lid, and then boom, 2.5R, which ended up playing out. Sorry, this was the trade. Sorry, this was the trade. No, this was his POI that formed during the Asia, and this was the lid, and price took out that lid, and it ended up playing out beautiful 2.5R. So I wanted to follow the trend, but even after the price took out the small internal low, I mean the price still didn't take out the small in the weak swing structure. So just follow the internal structure. So this was the POI which I expected the price to pull back and mitigate and then push down. I know which was beyond simple expectation. But if there is a possibility, I could look for sells, but that did not happen. So I ended my session without any trades. Technically with one missed trade, but since it happened during the London lull, I did not consider that as a missed trade. So coming to April 2, any improvement in the daily structure? No, there is no improvement in the daily structure. The price is still in the same area of value. So what about the 4-hour chart? The 4-hour chart, the price reacted off from this demand zone, and then again this reaction failed. So this is a trap set by the smart money players, the big financial institutions. They give out a fake bullish reaction, and then they take out all the stop losses. And yeah, price push down. I know this will continue pushing down till the price takes out the weak internal low. So I can still look for sells today. So what I saw today when I jumped into the H1 chart was this beautiful equal highs. And not only this equal high, this all three highs actually formed lower resistance liquidity. So I was pretty happy. So if the price takes out this high and then kind of chalk bearish like this, so I would be very much happy to look for sells targeting the sell liquidity below. So why I am calling this as a sell liquidity? Because this low failed to take out this high, and price is now coming down, and also this low, I mean this POI does not have any inducements. It was a straight push up, so the only liquidity available is the sell liquidity below. So I'm very much happy to look for sells targeting this low if I get a strong protected high and a suitable supply to trade with. So this was not the kind of the POI that I expected, but still it is valid considering the sell side liquidity and the weak swing low, which is a visible target. But we can also see that there is a lot of buy side liquidity being accumulated. So which means that price can invalidate this POI, push further up, and then invalidate this POI, push further up, and then we can have some chalk here, right here, and then the price can push down. So that's also totally valid. But the question here is, if the price invalidates the supply, will the price form a fresh supply to trade with? So that's a big question. And yeah, I tried to play some LC1 kind of thing. So just wanted to check whether it worked or not. Actually, I didn't execute any trades. I just checked because I know it's unsafe to play an LC1. Unsafe to play an LC1. And I mean, the quality of POI is very low, and it is very unsafe to play an LC1 with this POI. So the price took out the low resistance liquidity above. So what I can expect now? A chalk bearish. That's the least thing that I expected from the price. But this was the chalk bearish line which I expected the price to take. But if you see it from a bullish angle, then you can see that the price at IBOS bearish, which means price had internally broken the shifted bullish internally, which means this internal structure can continue, and then the price can take out the swing high. So I'm not telling this is this could happen because the swing structure is bearish. All I'm expecting is the price to again internally pause bearish to facilitate the swing structure. But sometimes the swing structure fail, and sometimes the internal structure hold, and then the price can push further up to take out this high. So yeah, it is what it is. Like that after the price high boss bearish, the price actually started to consolidate within this range, and I did not get any trades on this day. That's all about April 2. So let's jump into April 3. So in daily, we finally have some internal structure. So this is an internal POI which I marked. So I can expect the price to make a pullback to mitigate into this internal demand, and then you can again expect the price to push further up. So that was it from the daily. From the 4-hour chart, this was a long elongation. So after the boss bullish, so looking for sells is totally valid. It's provided that we have a strong protected high as well as a supply from which we can time our entries. But until it forms, we can expect something the price to form a small pause like this, and then it can push further up. So this pause usually leads to some kind of a demand zone where the price will fill some pending orders and then it will push further up. So there is no visible demand zones in the 4-hour chart. That's why we got an H4, H1 chart, which would help us find out the demand zones. So here you go. This was the demand zone that I was talking about. Price can chalk bearish, and then form a complex pullback, mitigate into this demand zone. So if the demand is in control of the market, if the fundamentals support buys, then we can expect the price to chalk bullish, and then again the price to continue up, taking out the weak internal high. So that is the expectation. So I can look for sells if the price chalk bearish, and that would be quick in and out targeting this demand zone. So if the price reaches this demand zone, then the protocol, just wait for the chalk bearish, and then from this fresh demand, you can look for sells using M15 LC1s. But price, just went straight up. So just and it started to consolidate. Here you can see some kind of rejections coming up, but there is no real chalk to support that. So I was not interested in looking for sells. So that became the end of the day. So coming to April 4, the last day of the week. So here we can see a strong rejection. So probably we can expect the price to form a kind of pullback into this daily demand zone, and then we can expect either this demand zone to be flipped or this demand zone to be respected so that I can look for buys. So this is the 4-hour chart. We got nothing from 4-hour chart apart from the price was bullish and the strong rejection candle. So there is no chalk bearish or anything like anything technical which we can make use of. So it's just a raw price action. So here, in the H1 chart, we can see that there is a low resistance liquidity which has been created. So there is a lot of chance that the price can continue pushing further up. And there is also a demand right here, but I'm not going to take longs from this demand directly because there is price is now coming down with a lot of displacement. So this bearish momentum can hold and it can push the price further down into this demand zone. So if I need to look for longs from this demand zone, then I need the price to chalk bullish, and then from this fresh demand, I can look for buys targeting the weak internal high. So if the price flips this demand zone, then I can also look for sells, targeting the extreme demand zones. It's kind of low to medium probability, but still we can, considering there is no significant demands or significant areas of value to the left, we can continue playing sells. And yeah, price actually flipped this demand zone, and it is very much close to the swing low. So here we can see that there is no significant demands to the left apart from this one. So there is a lot of chance that this swing low can be taken out, and H1 can make a bearish swing structure. So that's a different story for next week. So let me quickly show you what happened in the trading view. So price actually took out the H1 swing low, which means we can either play the H1 swing structure, swing pullback like this onto the demand zone, onto the supply zone, and wait for the price to from the bearish structure and then play the H1 swing structure. So we can look for longs from here and sells from here. That would be the idea for the next week. But for now, there was one trade which I missed. So yeah, there is a lot of missed trades in the recent days. So with the new time zone shift, I think I can expect that I'll be able to cope up with the new shift, and I can utilize the opportunities coming along the way. So let's see you on the next week. Until then, cheers guys, bye.